Welcome everyone to Vested Interest. This is Shane, and in this video we will cover the three stocks I'm going to be buying in October. But before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. And for those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, dollar cost averaging into growing companies with positive cash flow that covers the dividend and a high return on their invested capital. I utilize a dollar cost average approach, consistently investing into stocks within the portfolio on a weekly basis. I also do larger purchases if I have extra funds from a bonus or a side job, something like that. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account. I don't have any other sites I'm trying to send you to where you have to sign up for a news to be sent to you, or another site to sign up to. We all have enough to pay for, but if you would like to help out the channel, if you could do me a favor, take a couple seconds and hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever we put out any new content. I do videos like this where I cover the stocks I'm looking to buy in the month we're heading into. Yep, that's right. We're wrapping up another month. September is almost over, heading into October. So I put out the stocks that I'm looking to buy in the coming month, so that you can understand where I'm going to be focusing on. Now, these will not be the only stocks that I'm buying, but these will be the primary focus of the month. So you should see purchases in two, if not all three of them, every week going forward, as well as, like I said, I'll mix in some other ones depending on what shows some value. And drop a comment down below. Let me know what you are buying in the month of October. What have you been adding to your portfolio? With record markets right now, are you selling anything? I know a lot of people are starting to book some profit, concerned maybe with a pullback or a prolonged recession if we do enter one, and the market dropping significantly, so they're putting some cash on the sides. Now, I'm not saying that's what I'm doing. I'm saying that's what some of the other big investors out there are doing, and investors in general. In my opinion, you just stay in the market and you keep dollar cost averaging, and if the market drops, that presents buying opportunities in good companies whenever that happens. Now, you need to be the one to do the research and figure out what are good companies and what are good companies for you, right? What I'm investing in might not be what you're investing in. We all have different timelines for our retirement. We all have different goals, what we want to do in our portfolios. Maybe you're a growth investor. Maybe you're not a dividend growth investor like me. Maybe you're younger and you want some more growth. I'm in my mid 40s. I just turned 45 here on September 21st. So last week. So my goals are maybe different than your goals, and that's all right. We all are different people. We're individuals, and you should be tailoring your investing strategy to your individual goals. Nothing wrong with that. All right, I'm going to get off my soapbox. We're going to get back into the three stocks I'm looking to buy in October. First up on the list, we're going to continue to add to our Alphabet position, ticker GOOGL. Closed out the week at $163.95. And as you can see here, 52-week range as low as $120.21, as high as $191.75. So they are floating between their 52-week high and their 52-week low, actually leaning a little bit more towards their 52-week high. But that's all right. This is one I am all right with doing that. Obviously, I'd love it to drop back into 120. I'd love it to drop back under 120. But it doesn't look like it's going to do that. It was in the 140s recently. Maybe it'll drop back down there. We'll see. But I'm going to continue to nibble on this one, probably 3-4 shares a week here. Going forward, I'd like to get this to at least 100 shares here in the next month or two. So we'll see how we do in the month of October. But we've been adding to this one. As you can see down here, I do have a position in it. We'll talk about that here in a minute. Now, it does have a EPS of $6.97 per share. Price to earnings ratio is $23.53 currently. The forward PE is $20.41. So I like that the forward PE is much lower than the current PE. Presents a little bit more value there going forward. Dividend is 80 cents on the year. They are a quarterly payer, just divide by 4, so 20 cents per share basically. And that amounts to a dividend yield of 0.49%. So not the greatest dividend yield, and they did just recently start paying dividends this year, so we're not quite sure what their dividend raises are going to be. I am hoping for double-digit raises on this one because their payout ratio is so low. We'll see that here in a minute as well. Ex-dividend date coming up was September 9th. They did already pay out. So kudos to those of you who received your dividend already. A beta of 1.04, so they are slightly more volatile than the overall market. Analysts do call this a consensus buy. They have a price target of $197 per share, which would represent a 20.56%, excuse me, a 20.56% increase from where it currently sits. And they do have an earnings date coming up October 22nd. Jumping over here to the right, we're going to look at dividend yield theory to see if this one is potentially undervalued. Well, we typically would, but they do not have 5 years of dividend payouts to look at, so we can't really do that. And the trailing dividend yield compared to current doesn't really matter much either. Like I said, they just started paying dividends this year, so we're going to have to wait to see how their dividend raises shake out, and we'll have to wait till we get 5 years of data to be able to use dividend yield theory on this one. Now, payout ratio extremely low, 2.87%. Like I said, I would like to see double-digit dividend raises on this one with such a low payout, but we'll have to see what we get on this one. Now, some other metrics we can look at. Return on equity and return on invested capital tells us how efficiently the company is reinvesting back into itself. I like 10% or better for these metrics. As you can see here, return on equity 30.87%, 3 times what I'm looking for there. And return on invested capital 20.34%, double what I'm looking for there. Again, I like 10% or better there. EPS growth, I like 5% or better forecasted over the next 5 years there at 19.95. So very good forecasted projection. Now we'll have to wait and see if they actually hit that. But if they did, that's very good, as well as very high. Excuse me. My sinuses are killing me. It's fall. Obviously, the leaves are starting to fall here in Michigan. Revenue growth forecast is 11.16%. Again, if they hit those numbers, that's extremely high revenue growth. Dropping down to free cash flow. I like growing free cash flow over time. Typically, if a company has growing free cash flow, they will grow the dividends as well. It also ensures that the company is able to pay down its debt, make acquisitions, reinvest back into the company, buy back shares, and increase that dividend, which is what I like to see. Going back here to December 2021, you can see $67 billion in free cash flow. 2022 looks like a little bit of a drop down to $60 billion. 2023 back up to $69 billion. So far, trailing 12 months. Obviously, we're almost through September, so we've only got a couple more months here in 2024 before it'll just be 2024 numbers. But keep in mind that trailing 12 months does still account for a couple months in 2023. But so far, free cash flow of $60.7 billion. Now, repurchase of shares, you can see here, $50 billion in 2021, jumped that up to $59 billion. So part of that drop in 2022 can definitely be accounted for in the increase in repurchase of shares. Increase that again in 2023 up to $61 billion. Again, in the trailing 12 months, looks like they're continuing, continuing that trend of increasing their repurchase of shares as well, and can account for a little bit of that free cash flow. Though it does look like their free cash flow in 2024 might be down slightly. As you can see here, I do hold Google. I am long Google. And you can be buying. I did start out buying GOOG, but switched over to GOOGL because I did talk to a friend of mine who has been buying both for a while, and he let me in on a couple things I was not really aware of. One, GOOG are the shares that the company issues to employees, like executives and above. So you could potentially be diluted with those share issuances. Now, they are repurchasing shares, obviously, so they're pulling shares out, and I think they are pulling out currently more shares than they're putting into the market, which is good. But you can also be impacted by, my wife, for example, is an executive with General Motors. She gets shares of General Motors, and they are allowed to sell those shares. So sometimes those, and you can watch those sales, because sometimes, you know, they're insiders. They have more information than you do, and they can't share that information with you, but they can sell their shares before other people can, because they know things about the company. So that could potentially be an impact as well. I didn't really like that, so I switched over to GOOGL. GOOGL does give you voting rights as well, but that really doesn't matter right now because there are still less shares of GOOGL out there for individuals to impact the voting than there are for the original shareholders that continue to hold those shares. So it doesn't really matter that you're a voter. You can't really impact the company. But I am picking up GOOGL, not GOOG. Number 2 on the list, Cisco Corporation, ticker SYY. This is out of the consumer staple sector. And if I didn't mention Google was out of the information technology sector, I'm just assuming you know that by now. But they closed out the week at $77.66 for Cisco Corporation. 52-week range as low as $62.24, as high as $82.89. Another one that is kind of right there by its 52-week high. But again, another one that I am comfortable buying and continuing to add to my portfolio. I do have a position here we'll talk about here in a little bit as well. All of these this week are positions I hold and have held for a while. EPS on this one sitting at $3.89 per share. PE, price to earnings ratio, sitting at $19.96 per share. Again, forward PE lower than that at 16.87. Dividend is $2.04. They are a quarterly payer, so divide by 4. Their dividend yield is a little nicer than what you saw. Starting dividend yield a little nicer than what you saw with Google at 2.63%. Ex-dividend date is coming up October 4th. So if you were to buy this one now, you would be in line for the next dividend, but you need to be buying October 3rd or before. So really early next week is whenever you want to be looking at this one. And I will be probably adding to this one first part of the week so that I can pick up those dividends on their next payout. Excuse me. A beta of 1.20, so they are more volatile than the overall market, and you might be able to use the volatility to your advantage, right? Look for those dips. I've been trying to get this one in 75, 76 or below. I think I picked it up over the last couple months in 74 range even. So try to use that volatility whenever you see that companies are volatile like this to your advantage, especially if you are buying, right? Especially for cyclical companies, be buying on those downturns and then holding on the upturns, but we'll get past that. Analysts do call this a strong buy. They have a price target of $85.36, which would be a new 52-week high, represents a potential 9.92% increase in the price from where it currently sits. Earnings date coming up October 29th, so tune back into that if you're into earnings calls. Now, this one, we do have 5 years of data, so we're going to jump over and look at dividend yield theory. 5-year dividend yield average of 2.52%. We compare it to the current 2.62%. Or over here, 2.63%. This is from Yahoo Finance. This is from stockanalysis.com. That's why I always recommend more than one source. Right? Sometimes the information doesn't quite line up. It's pretty close, but not quite exact. But either way, whether you look at 2.63% or 2.62%, since it is higher than their 5-year average, according to the dividend yield theory, that speaks to undervaluation. Another one with a decent payout ratio, not quite as nice as Google, obviously, but their payout ratio is sitting at 51.67%. I like anything under 75%, so this still gives them a lot of room to increase that dividend, pay down debt, make acquisitions, repurchase shares, all the things companies do with free cash flow. Now, looking at return on equity and return on invested capital, again, I like 10% or better. Now, their return on equity is smoking high, highest I've ever seen. As a matter of fact, I'm questioning whether this is accurate. I would want to look and verify this with another source, but they're saying 99.42%, and that is smoking high, extremely, extremely good if that is accurate, but I'm questioning whether it is. Return on invested capital, 15.56, is above the 10% I look for there as well. Another one with very high EPS growth, again, I like 5% or better projected. They're sitting at 11.30 with revenue growth forecasted at 4.45%. Really, really good numbers overall for a company like Cisco that delivers food to restaurants, schools, the military, I believe as well, but primarily restaurants. So if you're eating at a restaurant, Cisco may have been the trucking company that sent you that food or sent that restaurant that food. Dropping down to free cash flow again, going back to 2022 here. They had $1.1 billion in free cash flow, 2023 up to $2 billion, 2024 up to $2.157 billion, and so far trailing 12 months, 2022, 2023, 2024, so their trailing 12 months already includes part of 2024, so it's exactly the same number, but that is what you want to see, nice, steady free cash flow growth. They are also repurchasing their own shares here, 2022, $500 million. 2023, $500 million, up to $1.2 billion in 2024. Very nice free cash flow growth, very aggressively repurchasing shares. Really like that. Cisco Corporation, my position here, I have 108.0407 shares. Obviously, I'm up a little bit, 13.25%. So I'm going to continue to add to this one. And my cost basis is low enough where if I add to this at $68.58, right, current cost basis is $77.66. I'd bring my cost basis up a little bit, probably into the low 70s, $72 range or lower is where I want to keep it, but I am willing to add to this one and bring up my cost basis slightly on this one. Now, last but certainly not least, another one out of the consumer staple sector. We are talking about Procter & Gamble Company, ticker PG, closed out the week at $173.47. 52-week range as low as $141.45, as high as $177.94. So they are right, really close to their 52-week high, actually. But again, another one I'm willing to add because my cost basis is so low. We'll talk about that here in a minute. EPS is sitting at $6.02 per share. Price to earnings ratio is high, $28.82 per share. That's pretty high, but their forward PE is lower than that at 24.93. I would like them to pull back a little bit. Obviously, their PE is a little higher than what I'd like it. Dividend is $4.03 per year. They are a quarterly payer, so divide by 4. Decent starting dividend yield at 2.32%. Ex-dividend date was July 19th. They paid out in August, so you wouldn't be in line for the next dividend. Well, you would be in line for the next dividend if you bought them now, but you're going to have to wait a couple months to get it. Beta of 0.41, so they are less volatile than the overall market. Analysts do call this one a buy as well. Price target of $175.89. So that really only represents a 1.35% increase from where it currently sits. So really Procter & Gamble, I'm looking at fairly valued right now, right? It's not really undervalued by much, if at all. Really, it's right around fair value. But again, I'm willing to add to this one long term. I'm wanting to hold this long term, so I'm fine with it. Earnings date October 18th. So another one with the earnings date coming up here shortly. Now we're going to look at dividend yield theory here again on the right. 5-year dividend yield average of 2.41%. Now on this one, 2.32%, 2.32%. Dividend yield theory actually says this one is potentially overvalued. So according to dividend yield theory, this one, 2.41%, 5-year average, is higher than their current 2.32%. So according to dividend yield theory, potentially Procter & Gamble right now is a little overvalued. Payout ratio under 75%, again, 63.60%. It is getting up there a little bit, so you want to watch that. But again, I like anything under 75%, so that's all right with me. Return on equity and return on invested capital, again, 30.68% on return on equity, very high, very nice. Return on invested capital, 15.6%, very good there as well. EPS growth at 9.13%, above the 5% I'm looking for, with revenue forecasted at 4.88%. Good numbers overall. Let's jump over and look at free cash flow growth here again. 2022, you can see $13.5 billion. 2023, $13.7 billion. 2024, so far, $16.5 billion. Trailing 12 months since they're already reporting 2024 numbers, same exact number. But you can see they are repurchasing shares as well. $10 billion in 2022, $7 billion in 2023, 2024, $5 billion. So growing free cash flow, though it may be a little misleading because they are increasing their free cash flow while decreasing their repurchase of shares. So some of that increase in free cash flow, it probably would be much closer to flat, I would say, if they kept the share repurchases the same. Now, again, Procter & Gamble, another one that I'm long on. I do have a very low cost basis on this one, which is part of the reason I'm willing to add to it right now. I do have 41.33 shares and some fractions of shares there, additional fractions of shares. My cost basis is $145.23. I am up, 19.5%. So again, another one I'm willing to add to, even though it's probably a little more expensive than I typically would like it. I'm willing to add because my cost basis is so high, and I wouldn't mind running this to my cost basis 150, 155. So another one. I'm not going to go heavy into Procter & Gamble. It's probably between the three of them. Google would be the heaviest one that I'm going to invest in. Cisco Systems second. Procter & Gamble, I'll probably add 1, maybe 2 shares a week throughout the month of October. I wouldn't mind getting this to 50 shares here. We'll see how much we add in October. Now on to some other companies I still think are showing some value right now that you might want to look at. Pfizer, General Mills, CVS, Chevron, Nutrien Solutions, Kraft Heinz, Havertys Furniture, Genuine Part Company, Comcast, and a couple of these aren't even in my portfolio. Several of them actually. General Mills is not in my portfolio. General Parts Company is not in my portfolio. Chevron, not in my portfolio. Now the others, Havertys is probably one you'll see me nibble on this week or this month as well in October. It might be one of the other companies that I add to along with the 3 we saw above. Pfizer, another one I wouldn't mind adding a little bit more there. Kraft Heinz, same thing. CVS, same thing. Comcast is starting to recover a little bit. I probably won't be adding a lot there, but Nutrien, I might add a little bit there. So this is some of the companies I'm seeing value. Drop a comment down below. What other companies are you seeing value in? Love to hear from you in the comment section. And that is really it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hit that subscribe button. Most of you out there who are watching the channel are not subscribed, and I really want to grow the channel, and I can only do that with your help. So again, hit that subscribe button. Help us keep growing this channel. Drop a comment down below. Let me know what you think of the video. What do you think of the 3 companies I am going to be adding to in the month of October, and what are you going to be adding to the month of October? I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situations, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.